In today's video, I will show you 5 clever ways to invest in companies and projects with a small budget, starting from as little as $1. Plus, these investments make great choices when the general market outlook is not so good, such as during this ongoing recession. Number 1. Invest in pre-IPOs. What if you had been able to invest in companies such as Tesla when they were still new? Traditionally, pre-IPO stocks are exclusive to only accredited investors and institutional investors such as venture capital firms and angel investors. These companies make a lot of money by selling the shares after the companies they invested in are listed on an exchange. That's because the share price usually increases a lot after they can be publicly traded. For this reason, the chances are slim for retail investors to invest in pre-IPO stocks, because those stocks are normally sold in bulk, which costs a lot of money. Thanks to innovation and technology, now platforms like Raisin provide retail investors opportunities to invest in pre-IPO companies directly for as little as $1. Raisin does background checks on the companies for retail investors and lets investors purchase a fraction of a share via their app. However, take note that such kind of investments normally have a lock-in period, and the secondary market to sell your shares might not be so liquid. Number 2. Invest in ETFs. Traditionally, discount retail companies and medical or pharmaceutical companies perform well during an economic crisis. However, in order to reduce risks further, it is better to invest in a group of companies. ETFs, or exchange-traded funds, give you such opportunities. ETFs are available to buy from most brokers and online platforms such as Fidelity, Webull, and many others. They are like mutual funds. Each includes a selection of stocks, bonds, or commodities, and they can track specific indices and sectors to match certain investment strategies. Different from stocks, they have administrative and overhead costs, called expense ratio, which needs to be paid by investors. When choosing ETFs, it is important that you check and compare how much the expense ratios are for individual products. A high expense ratio will affect your profits. Number 3. Preferred stocks. Different from common stocks, owners of preferred stocks typically do not have voting rights. As a result, they do not get to vote on decisions such as choosing board members or stock splits, mergers, and acquisitions. Preferred stocks are usually owned by institutional investors. Now you can also buy preferred stocks on platforms such as Fidelity and Robinhood. There are a few reasons why preferred stocks are a good investment opportunity in uncertain times. Preferred stocks normally pay fixed dividends, which are higher than bonds. In the case of bankruptcy, holders of preferred stocks have more priority to get payments than common stockholders. The prices of preferred stocks are much less volatile than common stocks. This kind of stability is particularly important for investors when the global economic situation and outlook are not that promising. Number 4. Invest in small businesses. With platforms such as Mainvest, you can invest in small businesses across the US for as low as $100. Be it a bakery or a florist, you can provide funds by buying into or lending to a business of your choice. As a return, you get a share of the revenue from the business, or you get interest plus principal payback over an agreed period of time. The terms vary between business to business. The platforms that offer such investment opportunities usually subject the companies to a thorough analysis and evaluation process. However, there are still a few things you should pay attention to. Refrain from investing in companies that are in sectors that are strongly dependent on cheap energy and which will suffer in an inflationary environment. Focus on small, agile businesses that can source most of the things they need, such as energy supply, raw materials, workforce, locally. Focus on businesses that have pricing power due to very strong client relationships, intellectual properties, and/or strong connections to governments. One downside is that this form of investment is not liquid. There is currently no secondary market where investors can sell their investments. Number 5. Invest in large-cap crypto, such as Bitcoin and Ethereum. Last but not least, cryptocurrencies are another great investment opportunity when you are on a small budget. One of the biggest advantages for investors is that Bitcoin, Ethereum, and the others are divisible, meaning that even when Bitcoin is at 20k, you can still buy a fraction for only a few dollars. Make sure to check out my recent video about different accumulation methods for Bitcoin. As it turns out, most of them can make significant returns. The link is below this video. Also, Bitcoin will likely become a life raft for many investors when inflation is high. Ethereum, on the other hand, is the largest smart contract platform and the second largest crypto in terms of market cap. It hosts hundreds of decentralized projects for gaming, decentralized finance, supply chain management, and so on. It is a good diversifier to add to your crypto portfolio. If you want to know more about building a crypto portfolio, you should check out the video I made on this topic. It will show you the basics how to do it. Alright, these were the 5 methods how you can invest in companies and projects with a small budget. If you liked this video, please like, share, and subscribe. See you in the next one.